Morning, promising news for the U.S. economy. Inflation continues to cool down a bit. The Consumer Price Index report just came out this morning. We're now knowing that it increased 2.9% year over year. While that is a slight rise, it is still the lowest level that we have seen in 3 years. It does also fall in line with expectations. So what does this all mean for us? UW Finance and Business Economics professor Philip Bond is here to discuss and how it plays into our local economy. Philip, thank you so much for joining us this morning. Right here on Call. So we just mentioned the new Consumer Price Index report, also known as a CPI. Why is this such a significant measure of the economy?
Okay, well, this is really the main measure of inflation, which people are naturally worried about. And so it tells us how fast prices are rising. Exactly as you said, this is moderately good news. It continues a trend over the last year or so of inflation rates being consistently at about 3%, which is, as people will know, is much lower than had been the case.
You know, we were anticipating this news today on this Wednesday morning. When you first saw those numbers, what were your biggest takeaways?
I mean, I think this was sort of widely expected, so I think this is right in line with expectations.
We always like to kind of take it home a little bit more locally here in our state. What might this say about the strength of Washington's economy in particular?
I mean, I think it's going to affect Washington the same way it's going to affect most places. I think this continuing moderate inflation is going to solidify the Fed's ability to start cutting rates. Cutting rates will bring down rates on everyone's loans. Mortgage rates have already started to fall. Mortgage rates fall even in advance of Fed moves. Yeah. So mortgage rates were already down about 3/4 of a percentage point over the last month or so, and I think that will continue.
This is such a welcome news for everybody. I mean, to see this sort of slight downward trend when people are still wanting to buy homes. We just go to the grocery market, prices are so high, so people are really paying attention to this.
That's right. I mean, I should say the grocery store prices in particular, part of the news in this is that grocery store prices, at least at the national level, have really not moved much over the last month.
Was this at all surprising considering the weak jobs report from about a few weeks ago? Yeah. Big contrast. We're seeing this positive news, but you'll remember with that jobs report from a while back, it just really rattled the markets and people felt very uneasy. However, we know that things bounce back, of course. Well, how does this all come into play, this contrast here that we're seeing?
I mean, I think the jobs report ended up getting mixed up with a completely separate move from the Bank of Japan to raise its own interest rates. Yes. So I think that the effect on the market was really the combination of the two. And so I think the jobs report per se, I think, didn't have so much effect on markets. So
we're talking about all of this, but the big thing that we're watching, the Fed, sometime next month, the Federal Reserve is going to be meeting less than a month away with pressure to lower those interest rates. What can we expect from Jerome Powell? Is this one of the strongest indicators yet? We need to lower those interest rates.
I mean, this I would say it gives Jerome Powell the ability to lower interest rates. The Fed has been very clear it will only lower interest rates if it feels inflation is under control, and I think this contributes to that. Whether they feel they need to lower rates will really depend on news coming out over the next month, which will indicate the extent to which the economy is or isn't cooling. Yes. So they'll be looking at like the next jobs report in particular.
Right, and going back to this grocery store, and so just, for people who are, they see it as the prices that they're seeing that they're having to pay when they're going out for their groceries. It seems to really be a good indication that inflation is finally beginning cooling down. That seems to be the biggest takeaway here.
I think that's correct, yes.
Okay. All right, Philip Bond, thank you very much for joining us and breaking it down for us. We'll have to see how things go as we anticipate the Fed Reserve meeting, and we'll be sure to stay in touch to break it down again. Thank you, Philip.